Welcome to the latest episode of The Financial Frontier. I'm your host, Patrick Camuso. I'm joined today by Andrew Gordon, CPA, tax attorney, managing partner at Gordon Law Group, and founder of Main Street Crypto PAC. So Andrew's one of the few people that is a practicing crypto tax attorney working on crypto tax policy in DC. So this will be a very interesting conversation today. Andrew, thanks for joining us.
Thank you for having me. Looking forward to it.
Absolutely. So there's a lot I want to cover today. I want to start with, one of the things that's going to be top of mind for investors, platforms, basically everybody that's operating in the crypto this tax season, and that's the 1099 DA. The IRS recently just came out with guidance for tax professionals on how to reconcile these forms and what to expect when dealing with them. But I want to get your take on what are going to be some of the biggest operational challenges that platforms, marketplaces, custodial providers that are issuing these forms. Let's start there first.
Yeah, well, first of all, it's great to see that the government is thinking through digital assets and tax reporting, how to make it easier for consumers, everyday contributors for tax trading. Because historically, it's been like nothing else, where individuals have to come up with their own gain and loss calculations, report it on their taxes, and if they get it wrong, they're penalized. So it's great to see that the IRS is moving forward. I think there's going to be a lot of difficulties that all different stakeholders are going to face. And to your question, starting with the custodial providers, the exchanges, they now have responsibility to issue these forms. And what I think is going to likely happen is that the recipients are going to, for the first time, deal with reporting taxes. And there's going to be a lot of questions, uncertainty, and the cost basis really is stemmed from having a complete picture. With stocks, with 99Bs, you have cost basis, sales price, you have all the information you need. But with the 1099 in the next few years, you have a requirement for cost basis for earlier year transactions. It's going to leave the everyday trader.
Absolutely. Yeah, it's going to be, a huge probably customer service strain even for a lot of these platforms when the 1099 DA comes out, because I'm sure they're going to be getting a lot of questions from people that are receiving them on the platform, because the information on them are going to have to be reconciled against taxpayer data, and it's going to cause a lot of complications, I believe. On the investor side, what are you seeing there? Are they preparing themselves for this? Are they in compliance with the revenue procedure 2024-28, for example? Like, what are you seeing at your firm with that?
Our clients, are prepared, are ready to go. But my guess is 99% of the crypto investors out there have had some tax compliance issues with respect to their crypto historically. And most likely have not complied with the new revenue procedures, have not complied with the safe harbor, starting to move to per wallet accounting. For many people out there listening to this probably think I'm just saying a bunch of gibberish. That's exactly the problem. Most people don't know what even these new rules are. Most accountants and CPAs out there aren't informed. If you're a crypto investor, you're a CPA. Otherwise, you could be yourself at a lot of risk.
Yeah, I'm seeing that as well. Obviously, the investors that we're working with that are returning clients to our firm, they're up to date, they're covered, but a lot are completely in the dark on this. A lot of them aren't even caught up on their accounting with their portfolio, which is a prerequisite when it comes to a lot of these steps to get into compliance with the revenue procedure in anticipation of the 1099 DA. And I'm also seeing the same thing out there with many accountants and CPAs that aren't as deep into this crypto tax world and they're not up to date on the revenue procedure. And if you're not reading it carefully, you may not be advising on it properly. And, it's really going to hurt taxpayers that aren't following the account-based approach that is required as part of that revenue procedure. So, Andrew, another element of this that I think is really interesting is how the 1099 DA may apply in the future to DeFi protocols. Really escaped being included in the current finalized regs, as everybody's aware of. But where do you see the future of that going, especially, looking over the long term potentially as administrations may change? How do you see this shifting in the long term?
Yeah, it was. I'm very happy to have seen that the DeFi exchanges were by act of Congress from the final regulations, but it was a touchy situation for quite a while. DeFi exchanges are going to have to report and to subject foreign entities that have even no real establishment, many of them, to these reporting requirements. They're going to basically cut out U.S. people, and for the U.S. to dominate, it's kind of a scenario where it's either if you're from the U.S. or North Korea, you're restricted from these different platforms. Everyone else can do it. Doesn't put us in a great place competitively. Fortunately, Congress acted to stop this nonsense requirement from being replaced. But you bring up a great point, which is in the future, less friendly administrations, people that are perhaps less or accepting of the great features and potential of crypto may want to tighten the reins, and a great way to do so is on decentralized exchanges, where a lot of activity occurs. We're seeing a lot of our clients nowadays. Many of them do a lot of their activity DEXs. Centralized exchanges have a purpose for onboarding and offering. And I think that's why they're offering their own DEX because there's more and more benefit of it. So I won't be surprised if there's actions or attempts to try to do similar things, but that's why I think we need to make sure that we continue to have our voices heard, and the voice of the users, because it's one thing the effect of the regulation on big exchanges. They get the money for their lobbying efforts and their massive political campaigns, but the everyday investors, we need to make sure that we have access to these foreign DEXs. It's great for some of the U.S. exchanges if these types of things occur, but not great for us.
Absolutely. And I agree with you. This is going to be a huge area of debate and contention over the long term, I believe. And it's going to be an area that people need to continue to stay focused on. And I know you're doing a lot at Main Street Crypto PAC, give people a voice and allow them to give input on these matters. And I really want to get into that with you here shortly as well. But I think this is a good example of where that may fit in. So you've also, I've been, obviously we follow each other on Twitter, on LinkedIn, and I encourage everyone to follow Andrew on there as well. And, one of the things I've seen you mention is proposing a safe harbor for unintentional non-compliance. Obviously, we both see this at our firm. There's a large degree of non-compliance overall for taxpayers when it comes to crypto. You're still going back years and years cleaning up people's unreconciled cost basis, just like I am at my firm. Even on the IRS's website, they cite a 75% non-compliance rate for investors. So it is, a big issue overall. So what is your experience in DC? What's really the legislative appetite for this kind of reform and putting something in place for this?
Well, as a starting point, the appetite is better now than ever before. Over the 10 years, and you can attest to this, we've been trying to fight back against IRS being overbroad and not even knowing things like stable coins are dollar cost basis, right? Simple things they know. And now meetings I've had, staffers on Capitol Hill, senators, congressmen, they understand crypto, understand issues for crypto taxes. And I only see that growing in the coming months. It seems that there's indications that there's going to be more attention on crypto tax, specifically stable genius, clarity, market structure. The real issue, the real fight for crypto is and it seems that waking up to that because taxes, death and taxes, anything certain. If we need to fix taxes for crypto, they're certainly open to it. We need more discussion about the potential voluntary disclosure program. And it's one of the points that I've been talking with them about. We need more attention to it because there's still the misconception that people in crypto want to come forward. Right? This non-compliance, we all know, right? It's probably much higher than 75%. Much higher, but there's some people wrongfully think that just because it's the crypto industry just doesn't want to comply. I think that's largely gone away. We are happy to pay tax on our 10x gains. Happy to pay the long-term gain, as little as possible, right? But we want to do it. We just don't know how. It's very difficult. You got to pay terms like yours and mine in order to do so. You're afraid. So we need more people, more voices. And that's one of the things that I continue to fight for, to change that conception so that we can have a meeting, something like a voluntary where we can come forward, not fear criminal investigations or audit, but we can file our returns, or pay minimal penalty. Government collects a lot of money. Everyone does.
Absolutely. At the end of the day, I think it's a huge step the government can take to supporting a better compliance rate with investors, along with maybe adding some new changes to some of the other areas of taxes. And one thing that I really agree with is exception for transactions under a certain threshold. And I know that's something that you believe in as well. So, how do you view that working, and like what are your conversations around that in terms of like, are you throwing around like thresholds and mechanics of how that would work, or just the broader concept of it? Like where are those conversations?
Yeah, crypto tax is too complex. It needs to be simpler. You shouldn't need to report every $5 transaction. No one cares, right? The IRS, they're not making any money. They're more money to process pages they're collecting. It's not worth reporting, but the rules have been such that every dollar needs to be, every cent, fraction of a cent. We've had times where we've had to literally ship a box, a banker's box, but it didn't. It was a bigger box, and to ship it to the IRS because the e-file is too big. The PDF, it's outrageous. We don't need to do all that, and we're never going to be at a point where we can use Bitcoin for a cup of coffee or let's get away from Bitcoin. Stablecoin. Can't use Bitcoin for a pizza. You've got to report the gain loss on your $20 pizza. I mean, no way. So that's something that in my conversations with people in DC, Senator Lummis has a crypto tax bill which has been introduced. We're going to go to the finance committee soon. About a month ago, I met with staffers, Senate staffers, and House Ways and Means Committee staff, both all acutely aware of the need for a de minimis rule. They discussed though it has short use, right? That you add an aggregate cap. Well, if you add an aggregate cap, calculate you're under over the aggregate.
Sure. Yeah. So then it still has the administrative burden. That's the problem. Is finding a path to this that doesn't increase the accounting requirements, right?
Right. So these things are being worked on, and the conversations are being had. It's unfortunately not that easy though to find a solution, but it's important that we're having these.
Yeah, I really want to see some form of a de minimis. I think it makes sense. And to your other point with stablecoin taxes, I'd love to hear your viewpoints on that as well, because I think that's something that's going to need to change if we really want to start to see more adoption for these types of stable coins and crypto assets in general being used as payment methods.
Yeah, absolutely. You want to know about stablecoins?
Yeah, a little bit briefly, because I know it ties into this a little bit. I think they're kind of related.
Yeah, very similar stablecoin, dollar for dollar peg, or almost always. Yet it needs to be reported, and this isn't theoretical. The absurdity of it is that we have several clients that have received IRS notices for not reporting stablecoins. Notice came with it. Sometimes those bills, tens of thousands, $100,000, for not reporting stablecoins. It's absolutely absurd. Now, should they have reported it? Maybe, but the reality is it's dollar for dollar. It should be zero gain or loss, or let's on a $10,000, maybe a dollar, right? But the IRS doesn't even understand it. They think it's zero crisis if you don't report it. I don't know about you, but I've never gotten a $0 stable coin. But the IRS, so we need to just fix that, especially the genius coming into place is now the law of the land, and we need to make sure that stable coins can be used for commerce. And the number one way is to fix taxes.
Yeah, absolutely. Yeah, I think this it's extremely important. Start seeing this get adopted as a payment method. Now, as it starts to get adopted as a payment method, there's the state level taxation and sales taxes, which is a whole another topic that we won't get into today. But another interesting area would be around staking. Obviously, this has been a huge debate sort of industry wide for years with tax court cases around it. I won't belabor the whole hit, but what are you seeing now in your conversations with regulations around how staking is going to be taxed, and what is your overall position on that?
Yeah, staking, mining, very similar also with airdrops. Right now, there's a double tax. You're taxed when you receive it. You're taxed when you sell it. It sounds simple, but for a lot of people, this actually creates massive problems. It's also unique in many other areas of where you create property. You're creating a work of art, or fishing, or mining actual minerals. The taxes with mining and staking crypto right away. It's a problem. It makes miners and stakers want to move outside the U.S. Right? It's hard to have a competitive U.S. In either of these industries if you have to give a portion as soon as you receive it and you sell it. You need to be able to accumulate, foster accumulation.
Yeah, and it's when I'm working with mining companies or staking validators, it is a huge pain point where you have to be deeply on top of your accounting and your tax projections and making sure that you're not exposing these staking rewards, the tax components of it, to the validity of the market. Because we've both been through enough cycles to know what can happen with that. You can quickly double your tax payment if you're holding it in Ethereum, for instance, and it drops 50%. So this can also go a long way in terms of simplification. Now, most of these things we've laid out so far, I think are great, and it's going to lead to some of them maybe less tax revenue from a tax perspective potentially for the IRS. And one big thing that's been on the table for a while is wash sales and how they apply to crypto. And I know, or I believe, at least from what I see, that there's an appetite for that still. a legislative appetite for that to apply wash sales to crypto. So, what is your perspective on that? And do you think that's going to maybe be something that gets wrapped into this to balance things out to a degree, or is it looked?
Yeah, it's a great question. And wash sales have been a great advantage for crypto investors over the years. The wash sale will apply to crypto. We've been able to sell edibles, which is an advantage. There have been many efforts for years by the administration and through legislation over the years to have it apply to crypto. And in some ways, maybe it should, but the effect would be very difficult even from a practical purpose to account for. The legislation I've seen, the wellness crypto tax bill going through the Senate, that includes a provision to close the wash sale loophole. And previously, when there was an amendment, one big beautiful bill, it also tried to close the wash sale loophole. It's very, very likely. And one of the things that's important to realize is the why. Senator Lummis, very pro crypto, wants to go to crypto. She understands the tax issues. Why would she be doing it? Well, in order for any legislation to pass, it needs to be revenue neutral. You can't give a tax break to the crypto industry. The way that it balances out is from the pay for it. That said, and I continue to have these conversations with investors and stakeholders, what's important is to hear from everyone, is it worth it? Is this trade? I think there's discussion about it.
I think that was just a reverberation. Try again now. Just start. You want to just pick up where you left off, or you could just again too.
Sure. Yeah. So there should be some discussion about whether or not it's worth it to pay for state pay for the business by closing the wash sale loophole, and especially the clients of yours and ours, being able to harvest tax losses is one of the best strategies that are available.
Yeah.
Being able to sell, buy back, we're able to, some of our clients, substantially reduce or eliminate their immediate year taxable gains. I'm not sure. I think that it requires some more thought and discussion.
Yeah, it's certainly a trade-off. And I know it's been something that's been on the table for a while. So, at least there is a trade, and we're getting, something on the other side of it. But yeah, I mean, it is interesting because I do think there's you got to weigh out both sides, but there's a lot of benefits to simplifying things with some of these other provisions when it comes to the de minimis exception and to staking and airdrop. So it's very, very, very interesting. Are there any other points because you've been in DC at a lot of meetings I would say this past month, and obviously beyond that, because you've been even before the tax front, I believe, just on the crypto front in general in DC from some of our early conversations. So really recently, is there anything else you've been discussing in your meetings in DC over maybe like August and September, the past month or so, that we haven't touched on that you're discussing with lawmakers?
Well, one of the biggest takeaways that I've had in my meetings over the last month is the focus on crypto taxes. That it's an area that you and I are very passionate about, but it's now actually being an area that DC and lawmakers are as well. So it's an opportunity for us to share our stories and it's important to us to be heard more than ever. It seems to be that will be the hot area of focus in the coming months. We had stable coins, market structure. My hope is now it's crypto taxes and needed. Within crypto taxes, though, there have been several different areas that have been discussed. Another area is overall the Treasury, the IRS making some decisions and changes, while having Congress step forward and implement this legislation. A lot of these things could be done by the IRS. They create these problems, or IRS create these problems, and now we're having to have Congress step in and fix it. But we have the IRS do so. So I've also been having conversations with people at Treasury about IRS changes.
That's interesting. Yeah, that's interesting. When we get more developments there, we'll have to bring you back on to discuss that. So you're doing a lot now in terms of this policy work, and what is your perspective on how can private consultants and private citizens, I've seen you maybe post some of this, some calls to action related to this. How can involved and start to give input, because this now it's going to be happening for some time. I think there's going to be many different iterations and discussions around taxation. It's going to evolve just like as this market evolves. There's going to be more tax questions that evolve. So what's the best way for people to get involved with something like this?
Yeah, well, reach out to me. I want to hear your voice to help elevate it to the people in DC. Fortunately, we have relationships, great relationships, policymakers and decision makers in DC. And as much as they like to hear from me and lawyers, the truth is they don't. They really want to hear from the stories of people that they can actually impact. And so that's where I can use the help from all of you. Share with me stories, how taxes, how crypto regulation has impacted you, how crypto has changed your life. These are the stories that matter to the people in DC. And we need to make sure that we're using this opportunity to have these voices be heard. Because it's too often that as regulations are put in place, that they're put in place to benefit the large Wall Street companies. And crypto, we're starting to see the same things. Sorry to say it.
Yeah. What is the best place for listeners to reach out to and to get connected with you to discuss these matters specifically, as well as Gordon Law? Everyone should reach out there, but specifically on these matters, I know you have cryptotaxreform.com. I know you have Main Street Crypto PAC, and you have a couple channels where you're posting a lot of this information. So what's really the best way to get tapped in with this? Contact you, get some of this information.
The best way to get on-ground updates is our Substack. Andrew Gordon Tax.substack.com.
Awesome. And I encourage everyone to follow that. I took a look at that pretty recently, and you're giving a lot of policy updates there from your direct experiences in DC. Really interesting content and very timely. So I encourage everyone, whether you're a CPA, CFO, investor, founder in the Web3 space, this topic touches everyone. So I encourage everyone to go over there and follow Andrew. So Andrew, I really appreciate you coming on as a guest. This is why I host the Financial Frontier. It's the sharpest voice from tax lawyers to policymakers right here on the Financial Frontier to keep everyone listening ahead of the game when it comes to taxes and accounting. So I want to again thank my guest, Andrew. And until next time, I'm Patrick Camuso signing off.